happens. So I think right now all these consumer companies are getting a benefit of doubt of potential economic revival, consumer sentiment revival, and higher volume growth. And that's what is sustaining their multiples.
JSW Steel, are they being prudent? Do they see something that others are not seeing and buying out the Tata Steel UK business, or bidding for it at least?
I don't think so. I think it will be a really bad strategy. I think that given that
one argument that was being made was, look at ArcelorMittal's recent numbers. Their losses halved. Could that be a signal that it can be a contrarian bet looking at the steel industry in Europe?
So I think if we look at steel industry globally, the steel industry in Europe or any part of the world is not competitive vis-a-vis China in any case. And the only reliance what we are doing now is that China will cut down production and that will balance out the world steel markets. But that's a very difficult assumption to make, and if one is making that assumption for strategy, I think it's the wrong way to go. And finally, Tata's tried a lot and they didn't succeed. So why does another Indian company think that it will be successful? I think that given that they have started to do well, JSW domestically, I don't know why, if this news is true, why they are doing it is totally beyond me.
It's also a function of timing, the cycle, you never know.
Yeah, well, I'll tell you, just before we hit that break, just there's some data digging. 3 months, steel as a commodity is up 38%. 6 months, it's up 50%. There's a fair amount of retracement that has happened already. Could there be a case that we might be reaching a bit of a near-term top in this bounce that we're seeing in steel as well? So that is the other point to ponder as well. I mean, we're talking about cycles turning, but there's a substantial jump over the last 6 months that has happened in these commodities too. However, I think we'll have to hold that for the time being. We need to slip into a break, come back, talk more about all of this with our experts, get in a couple of interactions on results as well.
All right, let's address another set of earnings. We have Keshav Bhajanka, who's director at Century Plyboards, joins in with a quick analysis of their numbers. Keshav, great to have you on the show. You're looking at 11% sales growth, profits are down 16%, and there's been a bit of a squeeze on margins as well to 17%. How would you rate the earnings this time around? What led to the decline at the operational level?
I think overall for the year we've done much better in terms of earnings compared to last year. Okay. The year was a bit difficult and we hadn't provisioned for certain discounts, but in the last quarter people really picked up in terms of volume. I believe we had 11% growth in sales volume, and because of that some discount that we hadn't provisioned for were actually paid out, and that led to a slightly lower realization, slightly lower profits.
But given that your stock has fallen 4%, I think the concern that investors may have is, what's the outlook going forward? Is the trend likely to be one of weakness, or is this perhaps more cyclical in nature, and so perhaps Q1 of FY17 will look up?
You see, if you look at Q3 versus Q4, we've grown by around 16%, and going forward, we're seeing a lot of optimism in the market. During the course of the current year, already in April, we've seen signs of revival. And going forward, I think we should be able to maintain our growth, the same growth that we've had in the past 4 or 5 years.
I'm just wondering a couple of questions. One is this cost increase that seems to have increased YOY. Is this something that will sustain in the near term?
cost increase, actually in terms of raw materials, costs have decreased over the course of the past year, whereas selling expenses have gone up to a certain extent. But I don't think that is an upward pressure. I think that is going to more or less maintain itself. And in terms of raw material, we have a big advantage due to our plants in Laos and Myanmar. And we will continue to have that advantage in the near future.
So my question being, this EBITDA numbers and the slight iffy performance of on the EBITDA front from Century Ply in the quarter, will it change immediately in the first quarter itself?
You see, for our industry, I believe 17 to 18% EBITDA margins are a benchmark, and I believe going forward, we should be able to maintain the same. I don't think we will drop margins at all. Having said that, yes, these are good margins, and we're trying to just hold on to the same.
Okay, so 17 is the baseline on margins for you?
Yes.
What about the debt on the books, and how is that placed to your essentially payouts on interest?
I think our debt has reduced over the course of the past year, not substantially, but slightly, especially in terms of long-term borrowings. Going forward, we're taking up two projects. One very large aggressive project, which is the MDF project, that's going to take place in Punjab. And secondly, we're setting up a huge plywood capacity in Punjab as well. So that is going to add some debt onto our books. But I think both the projects are highly lucrative. And going forward, I don't really see a problem with our interest payments.
Just a final question from my end. I heard you mention that you are increasing your ply capacity. And correct me if I'm wrong, but one of the brokerage notes dated end of February says that Century Plyboard as a company stated that ply demand growth is likely to be muted in the near term. And revenue growth for ply will be in single digits for FY16 in the near term as well. If that be the case, do you anticipate the second half of FY17 to be good, or will the ply demand come back only in FY18?
I'll answer your question in two parts. Firstly, regarding the growth prospects, I think ply growth in terms of volume will be in double digits going forward. Secondly, if you look at Hoshiarpur in itself, it has the lowest cost of production in the country. So this is sort of a natural hedge. We'll be able to reduce the cost of production further, and that should give us, or that gives us an opportunity to maintain EBITDA margins at the level at which they are today.
And finally, between laminate versus plywood, which business are you more bullish on in FY17, and where will significant contribution to margins come from?
Well, I'm bullish on both, but if you look at in terms of numbers, I think laminate should have a 20% odd growth again. It has done so for the past 2 years, and in plywood, I feel we are going to get a decent amount of growth. In terms of numbers, I think EBITDA margins for both are at a fairly high level today, and we're going to look at maintaining the same going forward.
Okay, one last question. You think you will do, because your PAT numbers have come off a little bit. The expectations were that FY17, you could well notch up a number of 200 crores on the bottom line. Is that still on the table?
Definitely.
Okay, you could do more than that too?
Well, we're bullish, so I would say that yes, 200 crores is something that we can target.
Okay, great. All the best. Thanks so much for taking the time out and joining us.
Thank you.
Century Ply, despite some pressures in Q4 on the margin front and therefore consequently on the bottom line, the management believes that the 200 crore number of PAT that a lot of brokerages are working with for FY17 seems to be a certainty. So the outlook is bullish. He sounded very bullish as well. Any thoughts here, Sandeep? You may not track the company, but you heard the management commentary.
Yeah, I think so. But see, I've tracked other companies also in this segment. So what will happen is that this capital expenditure, so he didn't quote the amount what they are planning to invest. So I think that will put some pressure on the margins in the initial stages, obviously. So I think this bullishness that margins will sustain despite capital expenditure, that it doesn't work that way. Because we saw in the case of Greenply also, when they set up the capacity, especially MDF is, because stabilization of MDF takes a long time. See, ply is a simple product, but MDF stabilization of the quality of the product and production, it took a long time for Greenply. I remember when they set up the capacity in Uttarakhand. So that's something which investors need to be wary of.
So you're not as bullish as the management is sounding about the business?
So I think there will be growth, but this kind of growth of double digits in plywoods is highly unlikely.
Okay. I just want to mark those flashes coming in from Dr. Raghuram Rajan saying the recovery from the global financial crisis is not yet strong. I think the only one that stands out is he's of course spoken about how rising debt has been the most obvious headwind to growth, and I don't think the world has come around to resolving that issue. And domestically also that continues to be a problem. Let's just get in quick strategies at 2:55. And Siddharth, I'll start off with you. What is it that you'd recommend at this hour?
Well, Tech Mahindra is one more stock which I'm liking. In fact, if I'm not wrong, a couple of days back or a few days back, even CK sir had this stock in the buy list. Today we are seeing decent built up, but more than built up, what has attracted my attention is cash-based volumes, which are significantly high. Stock is at cusp of breaking its resistance zone of 485, 490. I'm anticipating a breakout, and hence I would suggest to go long in this counter for the target and stop loss mentioned on your screen.
Dr. Narayan, your strategy?
Well, I'm going for a higher beta item, Grasim. Now, Grasim has had a terrific run, but seems to be in no mood to stop. And today's thrust is to a new high. And when stocks reach these higher levels, they actually gather even more momentum than normal. So I think it's clearing over at resistances of congestion nature. So I would recommend a buy at the current price of futures at about 41.80. You can buy it in a range, keep about 40-50 rupees as your range, because after all, it's a 4,000 rupee stock. And stock therefore needs to be at least about 200. If you can't afford that, at least mentally don't do this. And we can look at a target of about at least about 300 to 400 rupees from entry price.
Mitesh, what about your strategy?
I would choose a rail infra. I think that's showing some kind of good intraday chart setup. So that's a buy with a stop below 538 and look at targets of around 565, 568 over here.
Okay, gentlemen, let's take that break. When we come back, oh, sorry, Siddharth, you as well. What about your strategy? Okay, we'll come back after this short break. I think Siddharth just gave out his strategies. We'll just come back after this short break and get in the last 30 minutes of the session.
Your signature says it all. William Penn, fine writing instruments and men's accessories.
Stock Holding, we look after everything. Want to invest in National Pension System? We will help you.
Stock Holding, we look after everything. Call 1800-229960.
ट्रिप्स वही याद रहती है जो एज पर प्लान ना जाए. ऐसी ही ट्रिप्स के लिए JK Tyre Ranger Series with superior braking. Stop from 100 to 0 in 4 seconds. JK Tyre, total control.
आम की मिठास अब और भी खास. Sip India Sip, Mango Sip.
When the going gets tough, the tough get going. Ashok Leyland, one of India's largest manufacturers of commercial vehicles and a world leader in defense logistics vehicles. Tough, reliable, comfortable. India moves on Ashok Leyland.
Well, welcome back. You're still watching Closing Trades right here on ET Now. While we've spoken about this, Dr. Reddy's, that's been a key mover in the market session today, 78.80 coming in on the index. Dr. Narayan, would you want to elaborate on the kind of pullback you're seeing in Dr. Reddy's and whether that's sustainable or that's the one which is on your radar?
Yeah, I think what is really attracting me to Dr. Reddy's chart is the presence of a pattern that in candlestick we refer to as being a morning star, and this is in fact a morning doji star, which is a little more potent than a normal morning star also. And the kind of movement that we have had, the rather powerful drive, the big range, everything is almost textbookish. I think the stock had got bashed on a great deal and formed a doji pattern right at the bottom of the decline, showing that buyers had come back into the stock somewhere around the 2800 levels. And now there is a determined push. I do believe there could be a lot of shorts in the stock. And the numbers, there is a general market bruiting that it should be much better, EBITDA should be much better than what is being anticipated or what is the consensus view. Be that as it may, we will know that in 2 days from now. But it seems to be